Hello and welcome to yet another video in Kotak Stockshaala. And last video we learnt about some of the powerful understanding and strategies around what is a growth investing stock, how to understand the advancing phase, and how to correlate it with entry and exit of a company. Now we'll go deeper into understanding what are these four stages, which stage actually you should be riding. And this theory was actually first discovered by a person called Stan Weinstein. So all attributes and credit goes to him for finding this entire thing. Now let's understand, going back to the screen. The first stage is basing stage, right? Where you are seeing this a value stock. Now entering during that phase, although you might feel that you have entered at a very cheap price, but there could be a lot of waiting period. You might be holding on the stock on and on and on and on, but the price doesn't move anywhere. So basically the stock is waiting for right trigger to fire. Now how to find out whether this actually company is in the right time? Now there is no 100% right way doing it. There is always a probability to find this out, and we'll learn more about it in the pattern which I'll be sharing with all of you. But that second stage is called advancing stage, which is in this blue dotted line in the video, right? So ride that entire part as much as possible. How I showed in the previous video how you could have rode Eicher Motors during its entire journey. That is how you have to think about riding a stock into a stage 2 advancing phase. And once it becomes a growth stock, there are three major risks that comes into that stock. So if the stock is into peak earnings, which means the entire cycle is over and the earnings are at peak, the margins are also at the peak, and the valuation is also at the peak, it is called zone of high risk. And you need to be extremely careful in entering into stocks when it is into this phase. Now, if any of these things actually materialize, there will be a lot of distribution. So the top phase where the price stops moving further is called distribution phase, stage 3. And when this earnings momentum and this entire fall happens, this entire stage is called stage 4, which is called a declining phase, which you need to avoid at any cost. Okay, otherwise there will be big price erosion. You will lose big amount of money in your journey. So this is what is the deadly combination which you want to actually align yourself, right? So you want to have a phase where there is improvement in the market conditions. You are entering into bearish market and then exiting into bullish market. You want to enter where sectoral tailwinds are there. So the market is also improving, the sector is also improving. And the third combination is that the company's earnings growth are also increasing. Now we have learned how to find growth of companies earlier. So we learned 4-cylinder stage analysis model, where all the 4 earnings growth we learned about it. So first earnings growth trigger was sales growth, second was operating leverage, third was margin expansion, and fourth was debt reduction. So if you see any company where you have a market condition which is improving, second where there is a sectoral tailwinds, and third where the company's own earnings growth is also firing, these factors will increase the probability in your favor. Now that is what precisely stage 2 means, right? As I have given a screenshot of Sholay movie, you have earnings growth and valuation both in your favor. As you move forward, both of them might not be in your favor. Now we will learn about a powerful strategy called as base breakout strategy, which we use in our technofunda research, and even to our clients we have been sharing research reports based on this strategy. Now please understand that this strategy is not foolproof. In investing, not every idea which you buy will work. Not every idea which you get in might produce great results. But you need to make sure that you increase your probability of winning and enter into a company which is potentially getting into that growth investing phase. So how to do that? With the help of technicals and fundamentals. So if you see the base breakout strategy, this is what happens. So there is a long round base, what you see like a cup pattern that gets formed. The volume shrinks when this fall is happening, and then the bottom gets formed. This is particularly called as value investing also, where you are bottoming in terms of the valuation also while the price is bottoming up, and as the good things are getting started, the base on the upward side gets built. So this entire cup is what is the initial base, and what you see this at 125 with a very rising volume is what is called breakout. It is called breakout, where the company is just breaking out in terms of price and volume. This is where you can enter. You can even enter early on when the the cup is getting formed and the turn is happening, but that is slightly more risky. Similarly, if you want to see the traits of what can be a true breakout, you want to see that the price and volume is in sync. You are also making a newer high in terms of strength versus the market. It should not be just due to the market up move. And you should also see that the pattern is very, very clean. It is not having too much of volatility in between. Now, this is the same pattern which we also use in our research. This is one case study just for you to understand. This is of Dixon Technologies. Now, if you see, it was December 2, 2023, 5950. This is how it was done, right? So if you see here, this is where it actually broke out from this entire cup. And as I was mentioning, the volume should be very, very high when it happens. And then we follow this Shaktiman indicator. So until it becomes green, we want to keep riding it. So this is how we enter here, let's say 5950, and then almost around 16,000, you get an exit. Now, if you see this entire picture also, this background also has the stage analysis. So gray part, this is what is the brief stage 1, which you see. This green background, the entire green background is what is stage 2 advancing. This brief yellow background is distribution phase, and this red background is your declining phase. So this is how the stage analysis is embedded into Shaktiman indicator also. We'll take one more example, which is of Voltamp, which is somewhere in December 2, 2023. Again, these are just for illustration to understand the pattern. So let's understand Voltamp. So this is what is the December 2023 breakout. If you see, the volume also spiked, and there was a small base that get formed, right? So this was the entry point. And then we follow Shaktiman on weekly till it is entirely green. You keep riding it, and then ultimately it triggers your exit. And you can see, like, after that the stock miserably failed, and this is the phase you should avoid because this is the stage 4. This is the phase you should avoid because this is the stage 4. So you need to avoid this and ride stage 2. So this is like the practical application of how we apply this technofunda strategy. I'll just recap for your benefit. This is what we learned. We learned about how the volume and price breaks from its stage 1 and goes into stage 2, and how to actually make sense out of it. So hope you liked this entire analysis. Hope you understood how to make sense of stage 1, 2, 3, 4, which stage to ride, which stage to avoid, and hope you were able to relate it with practical examples which we took. Thank you so much again for watching. Hope you enjoyed this entire series where you learned different aspects of investing, right from building the net worth until how to play the idea end to end, from buying to adding to selling, what parameters to consider, what parameters not to consider, and hope it was a powerful learning experience for each one of you. Thank you so much again. I'll stay connected with you very, very soon, and I'll love to know your review, how you found this. And let's stay connected together. And if you have any queries, you can always reach out to me. I'm available on all social media, so you can connect with me anytime if you want. Thank you so much again. Take care, and see you soon. Bye-bye.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.